Okay, let's get started. So welcome everyone to webinar number 29. And in today's session, we're going to talk about decentralized finance. We will continue our discussion. This is the session we started long back. And today will be the last chapter of it. Then I also want to do a deep dive into a company called Nanox Imaging. And then we will jump on to some of the option trades and we'll open the floor for Q&A. So that's going to be our agenda. And if we still have time, I would want to discuss an investing framework, but if we don't have time, we will rather do that in our next week's session. So without any further ado, let's get started while the rest of the folks will join in some time. A quick disclaimer, this is not a financial investment or tax advice. We are here to learn from each other. Everything that you hear is for your own and my education. So don't trade based on what you hear or what you see in this session. A quick look at the markets on how the markets have done. Not a pretty situation. Almost all the big indices, SPY, Dow Jones Index, QQQ, they all ended in red. Similar to the situation that we saw last week. Even the previous week, SPY, Dow Jones, QQQ, they were in red. IWM, small and medium businesses, did a little better, but that's like marginally better. It was up 0.12%, which is equivalent to, nothing burger. No, not much changes around here. TLT bonds also down along with the stocks. Even gold also ended the week lower. So net, I think it's been a fourth week where we have seen the markets trending lower. And all because of the drama that we have been seeing in Capitol Hill. Stimulus coming, not coming. We see a lot of news bites being fed, sometimes by politicians, sometimes by secretaries. So we did see market being volatile, but in the end of a day, or end of a week, it did close weak. So we'll continue to watch it. A lot of volatility in market because of elections also. And now the whole talk around stimulus happening or not happening is adding another level of uncertainty in markets. So interesting stuff. On the big indices, year-to-date performance, even though most of them had closed lower for the week, year-to-date, some of them have done pretty good. Tech has been ruling. It's up almost 32%. SPY is up almost 6.5%, which is good from year-to-date perspective. Dow Jones and IWM, they still have to recover. But good to see SPY back in positive territory. It has been in positive territory for a few weeks, and now it's up almost 6.44% for the year. But the top three have been, and they have been there, I think, ever since the crisis, has been QQQ, gold, and bonds TLT. These have been the three top performing tickers for this year. If you look at a sector-wise, situation hasn't changed much. It's the same story that we've been seeing. Energy still down, financials still down. Good thing that noticed this week is utilities is back in action. From a year-to-date perspective, utilities have now recovered. XLU is up 0.2% year-to-date. Last week when we looked at it, it was actually negative 2%. So utilities had a good run this week. That's an overall market perspective. Again, not a big change from start of the last week to the end of the last week, like we've seen, there were changes, but hardly. QQQ, which is generally more volatile than the others, it was down just 2%, which is not big considering some of the changes that we have seen in QQQ earlier. So I had expected maybe a little more volatility going into elections, but we don't know when that will come in. Even VIX is now at 27.55. It's not even above 30. So unusual calmness, I would say, but that doesn't mean that we should let our guard down. We should still look at what, that there's still election, there's still uncertainty around election. And even after election, there could be an uncertainty around how the transfer of power will happen. It could be a bitter battle. So we don't know. So we still got to be careful from our portfolio perspective going into elections. All right. Vijay says, calm before the storm. Yeah, we don't know when the storm will hit. That's the toughest part of this work is we have to be ready for any eventuality, and we don't know when that will come in. Let's look at some of the news that caught my eyes. And if you notice, this time I have changed the format for last few weeks. We had divided into crypto world and the real world that we are familiar with. From this week onwards, I merged back into two. I merged both of them because based on what I'm seeing in markets for last few weeks, looks like crypto world is not going to be a complete separate world. Lot of companies that we know, lot of investors that we follow, lot of the known financial institutions, they are also getting active into crypto world. So then I was thinking, those are not two separate worlds. So let's combine both of them together and let's talk about some of the things that caught my eye. Number one, PayPal. Square is already has been on this bandwagon for some time. On a Square Cash app, people can buy and sell Bitcoin. So if Square is doing it, why would PayPal stay behind? So last week we saw news. PayPal has jumped onto Bitcoin bandwagon. They're starting a new service which will allow users to buy, hold, and sell cryptocurrency. It amazes me to see the change in the narrative in this world. A year ago, or 2 years ago, 2018, all the traditional finance companies were calling out that Bitcoin and everything else is fraud, JP Morgan, and then they have to, bite their words this year and start backing up this particular store of value. So the newest one to jump onto this bandwagon is PayPal, and we did see that once PayPal announced it, the PayPal jumped higher as well as Bitcoin jumped higher. And additional news that came in after this, which was on Friday, is that PayPal may even be looking to get bigger in this space by buying a Bitcoin company. So we'll see. There is no confirmation on that rumor or a news, whatever you may want to call, but we have to see if PayPal confirms it or not. But one thing is sure that, folks like Fidelity, PayPal, they're all jumping into this ecosystem. It means that the acceptance of this ecosystem is going to grow. Some things that we've already seen. And last week, another thing which I looked at was Ethereum, another decentralized platform. We talked about it earlier. Um, it is set to become the first blockchain to settle $1 trillion in 1 year. It is largely driven by the decentralized finance boom that we have been talking in the last 3 sessions. And most of those transactions happen on Ethereum blockchain. And with a market data aggregator, Masari, they found out that 30-day rolling daily average is at $7 billion. So if the current trend continues, we're not even looking at the trend to increase, but even if the current trend continues, it could become the first public blockchain to settle $1 trillion in transfer. In 2018, it did $500 million in volume. And now in 2020, or in mid of 2021, whenever that over 1 calendar year, it is set to process more than $1 trillion. That's an explosive growth. And we don't know what else has to come in future. There are a lot more things happening in it, as we have seen. We have discussed in previous session. We will discuss some of those things today also. But I'm super excited to see the traditional finance and adapting into this new economy. More and more use cases are being built, so which is super exciting, at least for me, especially for full disclosure, I'm already invested into some of these crypto assets. So that's why I keep an eye on what's happening here. The next thing I want to talk about, and if you have any questions, please put it in chat, and I'll take those as we move along. BaaS. So we have all heard about SaaS, which has been the best performing sector for almost 2 years. Then we heard about PaaS, which is platform as a service. We heard about IaaS, which is infrastructure as a service. Now we're going to talk about BaaS, which is battery as a service. And this concept, I found it really interesting. And I did see that even market had responded positively to this concept of battery as a service. So this is related to the EV industry, electric vehicle industry. As we all know, the biggest, most important component in an electric car is the battery. And those who own an electric vehicle, Tesla, or any other vehicle, they understand that the companies that will succeed in this business will be the ones who will have a better network for battery charging, right? So right now the range of the cars, if you have to drive from Bay Area to LA, you'll have to charge your car. And in some time, depending on how long the queue is, it could sometimes take an hour. And I've seen that when a group of, with friends, we drove down along with the families, and then one of them have a Tesla, they have to wait. And they'll call up and saying, okay, I will be 30 minutes late because I have to get on to supercharger and get my car charged. So company in China came up with the concept of battery as a service, in which, number one, when you buy the car, you don't buy the battery along with it. So it reduces the cost of the car upfront by almost $10,000. And the company we're talking about is NIO. And NIO has been in news, especially on the stock perspective. Maybe we just look at NIO. That will give a little more context to this discussion. Let's see how NIO stock has done. in recent times. Let me bring that up. Think or swim. On. Yeah. So NEO in last few months have done much better than what the general index have done. So, and one of the reason is their announcement of battery as a service, among other things. So if the car owners, if they're buying NEO ES8 car in which they're providing this battery as a service, they never have to worry about battery going bad. It's as a service. I'll go and replace the battery. So essentially, the concept of battery as a service is you don't pay for the whole battery upfront. You pay a monthly charge, right? Same concept like SaaS. You don't have to pay for software license. You just pay for the usage. Same is the case here. You just pay for the amount of the battery that you have used in a month. You don't pay for buying the battery as such. So as a car owner, I think this is a cool concept because it reduces the upfront cost of the car which I want to buy. I don't have to worry about that my battery has gone bad or I got a lemon battery. I don't have to worry about, hey, there is a new model of a battery and now I'm stuck with the old model. Right? Like on SaaS, you get continuous upgrade. In a BaaS world, you would get those continuous upgrade. So NEO has been building swap stations. Means if you have that ES8 car and your battery has, you have used it and now it's you need to get it recharged instead of doing a recharge of the battery. So NEO is building the stations where you will just take your car in and they'll just swap the battery because you don't own the battery anyway. All you are doing in this model is making use of the battery. You are just paying for the amount of charge that you've consumed in battery. So I did look at one video around how this whole process happens, and that's a really cool one. So I just want to show that to you all. It looks really cool in terms of how the car goes in and how they are able to change the battery. Just let me know if you're able to hear the sound behind it, or are you able to hear the sound from the video? No sound? Okay, then I'll have to give a commentary along with it. So this is a battery swapping station. Car goes in, stands on the platform, and then from the bottom, there are set of batteries which are on the rails. It goes, it basically will unscrew the used batteries, take it down, and then bring in the new battery. There comes a new battery, put it on the platform. And take it under the car, and then eventually the new battery is put it in the car, which is a really, really cool concept. Yeah, so that's exactly this works. And within 3 minutes, and then I also looked at some of the other video from a reviewer and one of the owner, and it takes exactly less than 3 minutes to swap the battery out. So that also builds my bullish case. So that also builds, my bullish case on NEO. I already had positions in NEO and I continue to hold it. Also looked at who are the other big holders on NEO. And I did find Bailey Gifford. For those who are hearing this name for the first time, Bailey Gifford's other big position is Tesla. So they know a little bit about this space, and they are the biggest shareholders of NEO as a company. So this is an interesting development to watch, to keep an eye. And currently this NEO is doing it only in only in China. So Ramesh says they will have to cater different models from Ford GM. So right now this is only for NEO cars. So NEO has got some cool cars, and if you haven't looked into NEO as a company, I mean, it's called Tesla of China. And not only they have cars, what they're also do NEO is to create an ecosystem for NEO as a lifestyle, right? So we just looked at their cool car is ES8, but overall, if we talk about NEO, what they're promoting is if you're a NEO owner, you're kind of that's elite. You come in that elite section of the society. So, and which is a big thing in China. So not only you have access to some of the exclusive facilities in the dealers, and let me just look at, I think somewhere they had a cool description of all what you can get as a NEO owner. Of course, you get the car, but apart from the car, you get a lot of other stuff. For example, they do have some fashion. I'm not looking at this. They have a childcare facility. They have a club. They have lounges, which are specifically only for the NEO owners. But those are, I would consider those are all the bells and trinkets. For me, the main thesis is around how are they gonna survive and grow in this particular market. So the battery as a service is really a concept that caught my eye. I see a comment or questions. Asif says, seems like an interesting model for owning or renting battery. Although, if I recall, percentage of cost from battery towards total EV cost is declining significantly. Yeah, so I think Tesla is focused on reducing the cost, but even now, from I looked in from NEO, by moving from owning to renting a battery, the initial cost will be down by $10,000, which will be, I think it's a big, it's not a small amount of money. It's a big amount. And if someone has to make a choice based on which car they want to go with, and if something is $10,000 cheaper upfront, and you only get to pay only for the amount of battery that you use, that might be a good incentive to go for NEO. And when you actually swap the battery, like I said, I was looking through a video of an actual owner. The way they charge you for the new battery is they look at how much of the power is still available in your old battery that have been swapped, that have been taken out, and you get a credit for that much amount. And when you get a fully charged battery, and then the battery taken out from your car is, that's sent for in the same location. They also have a charging station. So that battery then starts to charge up and be ready for the next car that wants to come in and swap the battery. So Tesla will be doing the same in US as NIO. I don't know. Tesla, I don't know if Tesla is going to move into battery as a service. At least I didn't hear that from Elon Musk in the recent earnings announcement. I don't know if anyone else have heard it or if I had missed it and anyone else know. But what I did hear is Tesla will be looking into some opportunities around mining, etc., so that they can reduce the cost of battery. They are focused on reducing the cost of battery. Ramesh, I don't know if they're moving into battery as a service, as a concept. I don't know if anyone else had noticed it. But this is definitely, I found this definitely interesting. And that makes me a little bullish on NIO. Next thing that caught my eye was Quibi. And I had mentioned it in the Slack channel that Quibi is shutting down barely 6 months after going live. Right? And Quibi had a very high profile backers behind it. And that got me thinking it means that the success is not a legacy. And like Jeff Bezos says, in Amazon, it's always day one. In businesses, same applies. It's always day one. So if you are not aware of Quibi, Quibi is a video streaming service. We have so many of them. We have Netflix, Amazon Prime, Hulu, Hotstar, HBO Max, Peacock. So it's easy to miss one, which is Quibi. And that is, again, one of their problem is there are so many of them already exist. The way Quibi was trying to differentiate is a proprietary, high quality content in a short bites. So that's why the Quibi name comes from quick bites. So they were producing short length videos. And the whole concept was, hey, if you are waiting for someone, you got 10 minutes to kill, have a quick bite. You are waiting in a queue to enter into a stadium, have a quick bite. You are stuck in traffic, or you are, on a public transport bus, have a quick bite. That was the whole concept behind Quibi. And the backers of Quibi, Meg Whitman, the ex-CEO of eBay and HP. Chairman was James, I forgot the full name of the person, but that gentleman, he was the co-founder and CEO of DreamWorks. Then he was an executive with Disney. So he was a chairman of Quibi. And they had raised more than $1.2 billion from some really big investors. When you have the management which is as credible as Meg and the other gentleman whose name I'm completely missing, people are ready to put money behind this initiative. $1.2 billion. And they announced their service less than 6 months ago. And this week they announced that they are shutting it down. So despite all the successes that both of them had, it's not a legacy that you can inherit, right? It's always day one. You start another business, you're starting it as if it's your day one. And then it's anybody's play. This really didn't work out for multiple reasons, even though Meg says that it's because of pandemic. It is one reason. If you ask me, pandemic is one reason, because people are not traveling. People are not queuing behind each other. The people are stuck at home. Quibi wanted to be the king of mobile platform. They did not even have a format which is good for the TV. And in last 6 months, people are watching more TV than on their mobile because they're not mobile anymore. They're not waiting in traffic anymore. But variety of other reasons were it was not a free service. You have to pay to see the content. It was all high quality content, but it is targeted towards the generation. It doesn't care about quality, which probably what love to watch more user generated content than a content generated by acclaimed producers and directors. TikTok. People like to watch TikTok more than a well curated series, right? So targeted at wrong generation, wrong time, and this is not free. People had to pay, even though it was $5, if I recall correctly, per month, with supported by ads, and without ads, it was $8. And some of their programs actually won a couple of Emmy awards also. So the content is decent quality, but the generation that they are targeted don't care about that content. So net bad for employees. Could be actually shutting down. I never understood what was the need of another streaming service anyway. If I'm watching something, I open up my Netflix and I pause it. If I have only 10 minutes to watch, I'll pause it and then maybe watch it later. So yeah, it had a very short shelf life, and Kubi is done now. Interesting one. And I think the chairman also came on CNBC to explain it, saying we just got it wrong. And now we want to close down the company and return whatever money that we can salvage from it. We will return that money back to shareholders. So sad news. All right, so some comments I see here. Asif says, so this sits in between owning the whole car versus leasing the whole car. Yes, you're not owning the whole car. You're owning the car minus battery. The battery is a part that you are leasing. Nirmal, can you throw some on lithium players? So Nirmal, I had never looked into lithium players, so I have no idea around any of the lithium miners. It's something that I can take a note of and see if I can find something interesting around the lithium ones. So mining is not my forte. LIACF, LILAF. Understanding mining operations. I don't think I've ever done that before. What's required to succeed in a mining operation. I've never analyzed any mining industry. So, but I'll take note of it and see if I can find some competitive data between these players. See Sumit saying another one, ALB. Okay. All right, I just took a note of it. So interesting stuff around Kubi. So next time you hear any project on streaming video, just think if there is a market for one more streaming. Oh, a lot of lithium fans we got in this group. PII, or is it PLL? All I heard was then when Elon Musk announced during the battery day, when he talked about around lithium mining, I heard that these mining shares actually went down. And I don't know how far, because I don't follow those, I don't know what's the truth in that. Ramesh put in a few more. Okay, so this is going to be, looks like one session completely to be dedicated on lithium mining operations. We'll see if I can pull up some content around it. There are a lot more other interesting areas that I find to talk about, but we'll keep an eye on this one. I took note of some of those stickers. Next one, which caught my eye, was Bitcoin endorsement by Paul Tudor Jones. So Paul Tudor Jones is a billionaire investor, most famous for predicting the 1987 Black Monday crash. So when he speaks, people do pay attention. And in recent times, Paul Tudor Jones said that he likes Bitcoin even more than I did then. Then means around May. So he talked about his investment in Bitcoin in May 2020. And now he's come back and say that he likes Bitcoin even more than what he liked in May. Jones praised Bitcoin on the morning show, reveals that he holds a small single-digit investment in his asset, which is fine. Single-digit percentage is okay because he runs a few billion-dollar hedge fund. His investment thesis remain unchanged. Let's dig into why he is interested. Bitcoin is an excellent hedge against inflation, which is expected to ramp up in the next few years due to central bank intervention. Essentially, I think he's using some nice words, of course, because he's on a channel, central bank intervention, and in a plain simple words, we call it the printing machine going brrr. That's what's been happening across the world, not just US Treasury. Across the world, central banks are printing money. US Fed as well as ECB, everyone is printing money. So unprecedented amounts of quantitative easing and balance sheet expansion, in addition to more aggressive commitment to inflation by the Fed. Remember, Fed told 2% is not a target anymore. That was a big policy change that Fed had announced maybe 2 months ago. So now they were more aggressive on inflation. So this has resulted in heightened inflation expectations that over in coming years, inflation will go high. We have so much money coming into system, the value of the money will decrease. That means inflation will go high. And Bitcoin, according to Paul Tudor Jones, is one of the best inflation trades when compared to gold, TIPS, Treasury inflation protected securities, copper, or other complex strategies. Now, I know if you are a financial advisor and if your client asks you, I want to hedge against inflation, you have to give an answer, TIPS. Any financial advisor here can correct me, but I believe if you tell them go and invest in Bitcoin, you may lose your license. Okay, I'm just kidding. But I think that this is, TIPS is the, people still consider safe because it is backed by US government. The standard answer for any financial advisor that if you want to invest and protect against inflation, go for TIPS. But Paul Tudor Jones, he's not a financial advisor. He's an investor. So he would rather do what he thinks will grow his money along with protecting against inflation. Let's continue. Last point. Bitcoin has enormous contingents of really, really smart and sophisticated people who believe in it. It's like investing with Steve Jobs on Apple or investing in Google early. Okay, I don't want to pay too much credence into this last sentence, but the fact that there are some really smart and sophisticated people behind Bitcoin and the whole decentralized world, that is true. We looked into last week that lot of publicly listed companies have now bought Bitcoin instead of, let's say, buying gold to have it on their balance sheet. The biggest ones are the MicroStrategy, Square, and we talked about a $10 billion hedge fund, Oaktree. I'm missing the name. You can go back and look at last week's video where we talked about another hedge fund which has invested $115 million in Bitcoin. Net, 3% of the overall Bitcoin supply is now on companies' balance sheet, publicly listed companies' balance sheet. 3% of overall Bitcoin. So if we consider 21 million is the number of Bitcoins that can be mined, 3% of it is already been cornered by these companies on their balance sheet. So, yep, I'm happy to see some endorsement by traditional investors on this one. So Dave is asking, Vivek, are you buying GBTC or something else? I'm not buying GBTC because I don't want to pay the fee. I am buying the raw asset directly, Dave. I directly buy a BTC, basically Bitcoin. And there are many avenues, as we talked in session number 1, in terms of how you can, if you want to, again, I'm not promoting anything. This is my opinion. But there are ways to go long on this. One is you can buy GBTC, which is Grayscale Bitcoin Trust Fund. And they are one of the biggest trust fund behind Bitcoin. Either you could buy GBTC or you could also directly buy Bitcoin. So if you are not comfortable in directly buying Bitcoin and leaving it on exchange, or if you don't know how to take it out of exchange and secure it yourself, but you still want exposure to this world, maybe go with GBTC. It's like a mutual fund. You have to pay your own expenses, their expense fee, etc. Question, are you doing any mining? No, I'm not. I'm not interested in any mining because number one, those days when you could have mined on your laptop are gone. You need specialized hardware for it. Hardware from Antminer, etc. Number two, my opinion is that mining has become commodity. So the profit from the mining will go, it will continue to go down. So I'm not invested in mining. I also looked at those mining pools, Dave, where you could just buy the hash rate, but then I wasn't comfortable. I never had a bullish thesis on the mining as such, so never invested in that. Right blockchain. So there are, let me just bring up, I think I did create a watch list some times ago around blockchain. Let me just bring that up. Do I see anything? Not here. Not here. Where is it? Okay, here's a blockchain crypto. It's been a while, so I have not looked into this, but I think I did have. So there are some funds. So for example, this is BLCN. Again, it invests in blockchain. Now you have to understand the difference. Blockchain and Bitcoin are two separate things. If you want a pure exposure to Bitcoin, for example, you want a pure exposure to gold, you would rather buy GLD or you take a possession of a pure gold. You will not go ahead and buy, let's say, a well-diversified a luxury like Tiffany, even though Tiffany sell gold jewelry. Right? They have a lot of other businesses. So similarly, if your thesis is around Bitcoin, GBTC is a Bitcoin trust. BLCN is an overall blockchain. I think BLOK is again a blockchain ETF. Riot is a company which is again invested into some of the mining operations. Now I don't know, are they only invested in Bitcoin miners or are they also invested in a lot of other miners? And I think they also own some of the mining operations. So you have to dig deeper into that. You want to invest in miner of gold, or do you really directly want to buy the gold? So make your decision based on that. And LBCC, oh, I think this became a penny stock. I probably had created this watch list long back. So for me, I don't want to own, or I don't want to have to do anything with the miners or any of the miners. So I wanted direct exposure to Bitcoin, and I just went ahead and added Bitcoin to my portfolio on Coinbase. There are other exchanges, Coinbase, Kraken, Gemini, which are US based and US regulated. So maybe you would want to stick to the ones which are regulated by US exchanges. Yeah. So that's how I have exposure to Bitcoin and some of the other assets also. Okay, any more question? We have one topic that we have to talk about around the decentralized world. We'll get into that. Let's look at what else caught my eye. Snap. The forgotten social media company. Forgotten means forgotten by the generations like me, of course, still popular among teenagers. And I think probably they have a particular age group and not much appeal beyond that age group. I know my elder daughter, she used to be active on Snap, but when I asked her recently, she says, yeah, that is fine. We don't do that anymore. We are not that active on Snap. I don't know if now because she's out of high school and into college, and it's not popular among the college kids, but it was popular among the high school kids. I don't know. But anyway, nobody had paid attention to Snap. We didn't realize what's their business model gonna be, but they surprised everyone with their recent earnings announcement. So Snap said that its revenue shot up 52% to almost 679 million in third quarter. Active users increased to almost 250 million. Loss narrowed. Of course, still loss-making company. They have to invest in growing the platform. But surprised, they had 1 cent non-GAAP revenue. And no one was expecting them to do or to generate any positive earnings. Analysts, they were all thinking that they will still generate a loss, but they surprised everyone. They surprised everyone on the revenue side also. They beat the estimates by $127 million. So no surprise around the stock performance after the announcement. So let's look at what the stock did. Oh, not SPY. I'm like, this doesn't look like Snap. Oh, that's Snap. That's it. So they were around 28, and now the closed on Friday at all-time high of 43, a tad above 43. So almost what, 50% jump from just their pre-earnings price. Suddenly, maybe a lot more investors have now understood or probably got more confidence saying Snap could become a big platform. Till now, most of the folks were skeptical if Snap could live up to the expectations and the hype that they had generated. They had their own set of failures. Snap glasses didn't go anywhere. And I think early part of 2020, there was some celebrity. She said that she didn't like the UI changes that Snap had done and she's dumping Snap. And then all her followers, they uninstalled Snap. So they have had their own setbacks. But this recent quarter really caught everyone by surprise. So I want to talk about a new area on Snap, which is, of course, everyone knows that Snap has got those ephemeral messages, which is what their USP was when they started. Then they came up with Snap Stories, quickly copied by Facebook. Anything Snap does, Facebook will copy it. And that's been the tale in the social media world. But what Snap has done little differently, and going back to their S1 where they said that we are a camera company, is that they have done some good work around augmented reality. And that's what I find more interesting, is some of the relationships that they have formed with good brands around the use of Snap's augmented reality feature to promote their brands. So for example, so this is what they say is, we believe augmented reality is the future of immersive customer experiences like try on, catalog browsing, showrooming. All you mean to say is, if I want to buy a shoe, one option is I go to the shop, try it on, see how it looks like. Another option is I use this whole AR, augmented reality, on my phone to look at how the shoe will look on my feet. Then why only talk about shoe? How about other pieces of clothing? How about me posing in a stadium, etc.? So this is what Snap has done. And I mean, this is Major League Baseball. They have an app called MLB Ballpark app. Again, if you're in a Snap, you can use this and get some cool pictures, wearing hat and holding this in a stadium with popcorn and stuff like that. But again, this is fun. The more interesting part is that Snap has a relationship with retailers and brands. They have a relationship with Kohl's and a bunch of brands, which allow customers to see themselves in the wares before they buy it. So I find this more interesting, a lot more interesting, because AR is going to be a next, I would say, a growth segment or growth propeller for many companies. Apple is doing some good work on AR. They filed some patents on AR side. So is Snap. So I want to keep an eye on Snap. Of course, it had a huge run up right now. I'm not saying that this run up is unjustified, but my personal take is maybe this is too much too soon, and may cool down a bit. Is it a short squeeze? Maybe. I didn't see that there were two, that the short position is too high on this one. So it could be anything. But I will keep an eye on it. I already had positions on this one. And, I'll continue to watch Snap. But this was an interesting one. Most of us have, or most of the analysts had kind of forgotten Snap, which thought it doesn't stand any chance in front of Facebook, Instagram, Pinterest, and they surprised everyone. Good to see you on the Snap site. Okay, let's move on to the last story of this week is Intel. Well, this kind of also hurt me when I heard about Intel and how the market punished Intel. But the fact is fact. They had a disastrous Q3 result. When I say disastrous, not from a numbers perspective, but how those numbers, the quality of those numbers. Right. So first, they had a drop of revenue. Understood, because of COVID, a lot of purchases, etc., would be postponed. They had a drop in net income, as well as a gross margin. They also has gone soft. So all three areas, revenue down, net income down, margins down. But I think this is what the market was, from a numbers perspective, not way off from what the street was expecting. So I want to make that clear. Even though there was a drop in revenue, income, and margins, the street expectations were not too high. But still, the stock was punished really bad. The reason is the mix of their financials. Let's not, read through this, but the net summary, what I could gather is, where there is a huge tailwind behind the personal computing space, means people buying laptops, people buying desktops. Intel's personal computing grew, but it grew at a very small pace, which is called a client computing. It grew only by 4% from previous, or 1% from last year, which was way below what it could have done. This quarter and the last quarter, there's been a huge demand of everyone working from home. If you didn't have a laptop, if my kid didn't have her own laptop or her own computer, now I had to buy it. And that's the reality. We bought a few laptops in our house, because it's not that we can now timeshare it while I'm using mine. I can't tell her that, you wait, let me finish my work, then I'll give my laptop to you, because all the classes are online. So we have seen a lot of growth in the personal computing space because of COVID. But Intel really didn't benefit that much from a revenue perspective. Even though the numbers could have gone higher, the units could have gone higher, but customers were buying cheaper units. They couldn't extract the price that Intel has generally been able to. So it grew only 1% as compared to 2019. So that wasn't good. Now, the double knock was on the data center group revenue, which is what their future growth engine is. That is where the most of the money is. Personal computing, fine. COVID has accelerated this. Once economy reopens, we go back to schools, you won't see that much demand. But the demand that is expected to grow continuously, because we are consuming more and more data, there are a lot more tailwinds behind this, is a data center revenue, which is what Intel had identified in their previous quarter, that we are focused on the data center side. And that revenue fell 17% as compared to last quarter, and 8% as compared to 2019. And this, in my opinion, was the biggest miss for which Intel was punished. Saying this is the biggest growing segment, And if you can't show any leadership or grow your share of pie in this, that's bad. AMD has and NVIDIA are becoming stronger and stronger in data centers. So I think that's what it is. The execution was bad. Last quarter, they got punished because of the delay in their 7 nanometer chips, which I don't recall if they have given an updated date for it. So because they don't have 7 nanometer chips, they have to invest and continuously build up 10 nanometer chips, which eventually they will have to phase it out. So now they have to invest in something that they have to drop and kill eventually. And they have to do it because they couldn't produce a 7 nanometer in time. So all execution misses. And I think that's why Intel got punished after their earnings. So it was trading close to 54, back to 48. So not good, not at all good. Makes me a little sad. Intel has been one of revered name in technology industry. It's like a giant whom no one could replace. I remember talking about Intel and AMD, and jokingly we used to say that AMD could be Intel, if Intel wants, they could kill AMD anytime, but they are just keeping them alive to avoid, all the scrutiny from lawmakers around throttling the competition or becoming monopoly. And tables have turned completely. Now AMD has gone is running much faster, and another player, NVIDIA, than what Intel is. Could Intel go IBM way? Who knows? But we'll see. Success is not guaranteed. We talked about it, earlier in Quibi. Success is not guaranteed. We have to earn it every single day. It's better if Intel team realize that they cannot bask in the glory of past. World has changed. They will have to change as well. Vijay says other stocks like Twitter, etc., moved up with Snap. Yes, sympathy run. Not just Twitter. We saw a big run up in Pinterest. Makes me happy. I'm more bullish on Pinterest than I am on Snap. But even Pinterest had a huge jump after the Snap results. So was Twitter. See, question from Dave. Say you can use Azure Windows Virtual Desktop. Yes, the context says you can use Windows Virtual Desktop to replace laptops, but it could be more costly. So Dave, that's fine. Maybe I could do it. The whole idea is a common person who is now working from home with kids at home and everything else, they will just go and buy laptops. And I have done that too, so that my kids can have their own schedule and everything else. So, and that's what we've seen, craziness in terms of not just laptops, but the peripherals. I wanted to order the camera that you can attach onto the screen. And when I went to the Logitech site, it was like, it's a 2 months waiting period. So I couldn't buy the Logitech. So then I have to order some other brand from Amazon, a cheaper one, but hopefully it will last for 6 months to a year. And that would be good enough for me. Well, I have been laptop shopping. Most of them are still populated with Intel CPU chipsets. I do see a few higher-end laptop with AMD CPUs. So it is true. So even I see with AMD Ryzen processor, I haven't had an experience of using any AMD machine. So till now, I am a little hesitant to spend big bucks without having tried it either on, an employer's a tab uh, or somewhere else. So even, now what all the laptops I bought, they're all having Intel chips. Again, the number of units shipped were higher, but looks like the average price or the average selling price were down. And that means the overall revenue did not grow for Intel as much as what they would have expected. Meantime, they have to add more to the cost because they were to ramp up their 10 nanometer because they couldn't do 7 nanometer in time. So I would say multiple punches on Intel. Hopefully, let's see if they can spring back from this one. But Intel trading where it is right now, oops, somehow, and again, this is my reckless prediction is maybe, is it time to get bullish? They have a decent yield, not the highest one that we have seen. If this was 4% or 5%, I would have gone and put a bullish trade. But it is, close to 2.75% yield. Not too bad. But if you liked Intel at 50, 52, then you should love Intel more here. I might still wait to see for a few days, if it pushes further down before I do any bullish trade on Intel. They said we just picked new iPhone 12. There is no charger. Yeah. So the reason if you looked into the reasoning from Apple around this is if it don't ship in charger, and I consider that BS. I'm like, ship charger, please. They say if you don't ship in charger, we can reduce the size of box. We can reduce the size of box means we can fit in more box into one pallet. We have to use less in packaging. It's great for environment. So we are removing the charger from our boxes because we care about environment. BS. So yeah, that's my take on what Apple says about why they removed the charger. All right, let me sip some water. Next section we'll get into continue our journey onto decentralized finance. Like I said, this is now colliding or intermingling with our current centralized finance world. So it will be interesting to keep an eye on this one. Let me sip some water. Any questions, please put it in chat. Otherwise, we will jump into decentralized finance. And then I want to talk about Nanox imaging. I'm thinking maybe to do a deep dive on one particular stock, maybe once a month. So I think it's been a while since we did the last one. I think that was maybe on Amwell. I can't recall. So I thought it's a time, maybe let's do one more. So I picked up Nanox imaging. We'll do that. And then we will jump onto our trades section. How are we doing from time perspective? I think we're okay. I did have one more content, but I moved it to appendix thinking we may not have time. And right now looks like that's the stuff. We may not have time. Paul says, can you do a session on technical analysis for option trading? So Paul, I don't use too much of technicals on options trading. I do a probabilistic based options trading, which I had covered in depth of how do we go around options trading in options boot camp. There were 12 sessions of options boot camp that we had to run through earlier to bring up everyone up to speed on options. So you may want to go to The recording is available on my website for free. You could go to the website and watch the recording. There are some technical, I would say, charts or indicators I might look into, but those are secondary for me to determine if I want to delay, let's say, opening a trade by a day or two. Those are not the primary factors when I'm doing an option trade. Technicals are the secondary factors. The primary ones are IVR, what's my probability of profit in this one, how much premium can I get it, how should I frame the trade, etc. Okay, hope that answers the question, Paul. Okay. Yes, Dave. Okay, so Dave is in the same bucket as me. Yeah. And I mean, why do that's worked for me? Plain and simple. I don't want to change it. Why change something? It is working well for me, and I understand it, like it, and I continue to work on that one. Yeah, that's true. We learn from the same space. Brothers from the same mother. All right, let's move on to our next section. Continue our peek into the world of decentralized finance. A quick recap for those who are new to these sessions. Like I said, we've been talking about it for quite some time. Session 1, we talked about the basic technology behind this. Everything we know as a Bitcoin, Ethereum, anything that we talked about in decentralized world, or you can call it Internet 3.0, you can call it Web 3.0, call what you may. The core technology behind them is a blockchain. We talked about blockchain, how it works, what was the first application, and then investment thesis, right? If you want to be invested in coins, what are the avenues? We touched upon it today also. Second session, we talked about other applications, right? It's not the currency. We talked about smart contracts. What are some of the different applications? Built our investment thesis on smart contracts. Slowly we moves into the biggest one and the most interesting one and the most volatile right now is a decentralized finance. Again, this is the application of blockchain as a technology. Netflix is an application of internet as a technology. Online shopping is an application of internet as a technology. So cryptocurrency is one application. Decentralized finance is another huge big application. Under that, there are sub things that we started to look into. So we started with decentralized finance in session 4. Session 5, we talked about liquidity pools, and then how you and I can become market makers in decentralized finance, not in the centralized finance. Then we looked at from mining to farming, yield farming, what does that mean? And last one topic that I have is NFTs. And last week I told about that this is the final topic in this journey. But as I've told time and time again, this space keeps on changing, keeps on evolving. And who knows, something else might turn up next month. So NFTs, nobody was talking about NFTs before, let's say, August. And now suddenly NFT is becoming great. So in 2 months, things have moved from who care, I don't know, oh, we got a lot of other interesting stuff to that becoming the hot topic. So who knows, by end of December, there could be something else. If anything else comes up, we'll talk about it. All right, so let's get into decentralized finance. The topic of NFTs. Now, where's my deck? Let's open it right here. Oops, Not here. There we go. Sorry, it took a while to bring that up. Okay, so we talked about DeFi. We talked about the business opportunity, how the amount of money getting into decentralized trading platform has been growing, almost doubling every month. Then we talked about tokenization process. And recently, I think there was a guideline issued by SEC around the whole tokenization. We talked about market makers and how we can become market makers through use of liquidity pools. And then we looked at some liquidity pools. Last week, we talked about yield farming, how using yield farming, we can generate additional yield while not giving up our assets. So we looked at a specific company called Yearn Finance, which is like Robinhood plus Wealthfront of this decentralized world. And this is where we finished it. Saying next week, we're going to talk about the final chapter, which is this week. So let's talk about NFTs, which means non-fungible tokens. That's what NFT is. So to understand NFT, we have to unlearn what we learned in chapter number 1, in session number 1. Session number 1, I talked about the first use case of blockchain technology was a currency. And today, most of the people only know about currency. They only know, and only Bitcoin. I think some of those who are a little bit active also know about Litecoin and Ripple and some others. But nobody talks about some of the other stuff that we have covered, right? Smart contracts, etc. So the rest of the world only knows mostly around the currency use case. And one of the reasons why this crypto assets could be used as a currency was because those are fungible. Now, the meaning of fungible is it is indistinguishable from another one. It's like cash. Whether your $1 bill and my $1 bill are no different from the usage perspective. Of course, structurally, they may have a different number, but from a use perspective, if you go to a shop, whether I pay by a bill that you hold in your pocket or whether I have, there's no difference. We can swap each other without causing any pain to you or me. We can exchange $100 bill. I'll give you mine, you give me yours, as long as it is not fake. We are talking about all the genuine bills. So we can easily swap it. Those are fungible. That's what a property called fungibility. The fact that these Bitcoins are fungible. My Bitcoin is no different from your Bitcoin. It has got no different value than your Bitcoin. That's what gave rise to the Bitcoin usage as a currency and now store of value. Right? Assuming if the gold properties are exactly same, the gold coin that you hold and the gold coin that I hold will be valued same because those are fungible. Now we have to unlearn it that fungibility is great when you're talking about use case as a currency, but it renders it worthless for other use cases. For example, boarding pass. So if I were to digitize my boarding pass, or if you are holding a boarding pass, we both go to airport, we get our boarding pass printed. Structurally, it's, from a looks perspective, it's the same. Your boarding pass is of the same dimensions like my boarding pass. It has got the same fields like your boarding pass. But those are not fungible. We can't swap each other's boarding passes. So now the whole concept that, let's say, Bitcoin is fungible, it can be used for a lot of other use cases that are present in general life, right? Boarding passes is one. Degree certificates, right? That's another one. Most of the certificates look exactly the same except one area where you have a name. But we can't swap those certificates. Those are not fungible. Each certificate is different from another one, even though it looks like the same. Similar is the case of ownership certificate, right? So now there's a lot of work happening around how to express these in the digital world. If eventually things will move from being a physical to entirely to digital, we need a way to express it so that those are not fungible. So we have to unlearn the concept that we learned in Bitcoin session, is that the fungibility. Now we want something which is not fungible. That's where the non-fungible token comes into picture. Okay. So although the two items may look to be identical at a glance, each will have a unique information or attributes that make them irreplaceable or impossible to swap. We talked about it already. For example, a replica of Mona Lisa is not of the same worth as the original Mona Lisa. It's in the French Louvre Museum. Millions of visitors go there to see that portrait of Mona Lisa. I could create, pay someone and create exactly the similar replica from the way it looks. I can put it on my house. I'm sure my neighbors even won't come in to see it. It's not the same, even though it looks like exactly the same. Just that the inherent value is not the same as Da Vinci's Mona Lisa. So if we have to convert a piece of art or the ownership of Mona Lisa, make it easily transferable. If the dream of our decentralized world or moving everything into the digital world had to be true, then someone who's owning the rights of Mona Lisa in French Museum and me who's owning the rights of Mona Lisa in my drawing room, even though both are of exactly the same size, the colors used are the same, everything is same, that ownership will be valued very differently. Right? Those are not fungible. Some other examples. So I don't know how many of you were actually active in 2017 and 18. There was a real surge in this crypto world around the concept of crypto kitties. And that's been one of the recent use of non-fungible tokens. Just to refresh your memory, in case you've forgotten, there were a lot of projects in this world around, one of them was around CryptoKitties. Means I can create a digital replica or a digital kitten. I will decide how the kitten hair would be, what should be the color of the eyes of that, what should be the fur quality, the size, the whole genetic DNA. I could decide and create that kitty. Now the kitty that you create could be much better than what I might have. And in 2018, those digital copies of kitties were being traded. In some cases, people were ready to pay tens of thousands of dollars to buy kitties from each other. This became such a big rage that it brought down the whole Ethereum blockchain. And we are talking about 2000, I can't recall, 2017 or 18, when the CryptoKitties came down. And of course, the rest of the technology was still evolving. There was so much exchanges happening, and the Ethereum blockchain wasn't even able to handle the amount of a traffic that was being generated by CryptoKitties. So, and of course, everyone was at that time was only looking at how can I buy Bitcoin or any crypto asset, and that will become double or 4 times in a week, and I'll sell it off, right? And then we know how those those waves end. But like I've told multiple times, when those what should I say, those speculators are out, that's when the real world work starts to happen in the back end. And over the last 2-3 years, that's the work which has happened in this world. And now we are seeing more established players coming in. So anyway, coming back to NFTs, CryptoKitties was the recent use. I think prior to this, there was some rare Pepe. I don't know, that somewhere in early 2012 or sometimes around that, similar concept had come in. But CryptoKitties is the one which is fresh in mind. Now, recently in MLB, they are planning to launch a game where the baseball cards can be exchanged on blockchain. Again, the baseball card is a baseball card. Same dimension. Maybe you have changed the numbers of how the card is. Maybe you have a different photo, right? But it's a card. But we know each card will have a different value. So you need to have a way in which one card is different from another card. And that's another use case of non-fungible tokens coming up. Or in a video game, I could create a fighter with an exceptional skills. So, or the fighter that you create, you equip a soldier with whatever sort of a guns that you can buy or ammunition that you can buy on Fortnite. That would be different than a soldier which I create. If we were to now trade those digital soldiers, we need to have non-fungibility, right? A great photo that I shot. And again, some of these are actual use cases. We will talk about it. This is not figment of my imagination. Or a song. So there are lot many use cases of why we need to have a way to trade these things digitally. Now, some of the other use cases, if this becomes true, that we can identify in the digital world that this song is different from others. The photo that I have and the rights of that photo is different than the photo that you have and your photo's rights, even though we would have clicked the same monument. Once, if that is guaranteed, then it allows the content creator to create and sell their own wares. Today, we need Shutterstock. It's not Shutterstock's photo, it's my photo. I give it to Shutterstock, and you give your photo to Shutterstock, and then we pay money to Shutterstock if anyone buys it. Or Spotify. Spotify don't own the song. We have to deal through Spotify. The artists have to deal through Spotify to reach out to end consumers, because there's no way for us to directly reach out to end consumers without compromising my songs. So NFTs could become a gateway for users to own their intellectual properties. Say, if I were to own a piece of art on a digital world, this could become my medium. Not only I own it, but I could also earn royalty through it. It could become a financial asset. And if there is a financial asset, there will be a marketplace, which we are already seeing. So we'll look into the example of a marketplace, but why we're talking about it now? Why we didn't talk about it, let's say 10 years earlier? Because of some advancement that have happened on the technology side. Again, everything behind this is an advancement in technology. We didn't talk about Netflix in 1990s, early 90s. Internet was there, but Netflix wasn't there. Nobody could have fathomed at that time. It took technology to grow up where the streaming was made possible. So for currency, and you can ignore ERC20, there are different protocols. ERC20 is another protocol on Ethereum. For non-fungible use cases, there are new protocols that have been built out. And those have now made possible to have this non-fungibility built into blockchain. And that's why now we are seeing a lot more use cases coming up, because there is a technological advancement that has happened over the past few years. So this allows users to store more information about the token. Okay. So ERC 721, what you talked about, was used in CryptoKitties. Now, a lot more folks are using it, and you will see more and more apps being built into it. When App Store launched, there were only 500 apps. So it'll still take time. I'm not saying that this becomes a rage next year. Maybe for next decade, it might still be in infancy. Who knows? There are a lot of stuff that need to happen to build a legal framework around it. And there are companies that are working on it already. How do we enforce the legality of these digital contracts that tells that this digital piece is mine? How are we going to enforce it? So there has to be a legal framework. All those things will take time. So we got to be patient, right? Not jump into, or not just discard the whole idea saying, oh, it doesn't work today, or it hasn't worked for last 2 years, or it, 2 years hence later, it's still not a mainstream. That does not mean that it cannot be. So we got to be patient. So for example, these are some of the things that exist today. Decentraland is a virtual reality where you could create your own pieces of virtual land and exchange it with others. Crypto voxels is a game where people can build their own virtual property. So there are many projects in it. There is so that's another one, which is Gods Unchained, is a collectible card game. We talked about MLB. They want to create a baseball cards. There are already, MLB probably will have a lot more value. We could see more adoption of that one, or the baseball cards ownership. But there are projects like Gods Unchained where they have a collectible card game. Crypto Heroes is a multiplayer role-playing game where you can create your heroes and then you can exchange it for others for money. And in this case, I don't have to go through intermediaries. If I can create it, I can exchange it, or I can sell it. So the concept around this is if I am an artist, I created a song, I don't have to sell the rights to it to Spotify. Today, many of the artists, they can't even sing their own songs because the rights are owned by Spotify. So, but in decentralized world, we don't have to do that. I talked about an exchange. There is one called Rarible. Again, very primitive. I don't think anyone talked about it 2 months earlier. But now this is becoming a point of discussion wherein you could go and have your own digital art being created, exchanged on blockchain. Also, takeaways. Again, I don't want to spend too much time on this one. It will take time to develop. Just want to give a quick introduction around this world. It could drive the next wave of adoption in the crypto world, because the concepts that we talked about earlier, yield farming, pooling, and yield generation, moving from one liquidity pool to another, these are difficult. These are financial concepts, difficult for you, for every common person to grasp. But owning a piece of art, music, that everyone can understand. If I tell someone that you should look into a decentralized world because you can earn a additional yield through yield farming by staking your coin in 0x exchange and then swapping it on Sushi Swap, people think I'm crazy. That just sounds so esoteric, sounds completely out of the world. But if you talk to someone saying, hey, on a decentralized world, you can own a piece of art, that makes more sense. So once the technological advancements happen on this world, the NFT could be a factor that could drive the next wave of adoption from the people who have been sitting on the sidelines because understanding everything else is too difficult. Again, we have to see how that plays out. It could bring in a lot more folks from the fiat world into crypto world, while the legal framework on ownership is being worked upon. So that's all on NFT. And like I said, this is the final chapter as of today. Any new interesting things that I see happening in this world, maybe we'll spend a few minutes as and when that happens. But this concludes our series of discussions on the overall crypto world. So we started from the very basics of blockchain all the way up to non-fungible tokens. So now if you go to any party and someone is trying to throw some words of yield farming and the liquidity pools, you know what the people are saying. Or maybe you can go and talk about these words and sound a lot more interesting or boring, depending on what type of party is it. People will say, okay, what the heck is this guy talking about? It sounds so much out of the world, which in fact it is. But it won't remain this way. We are now seeing traditional player moving into the first use case, which is a currency use case or store of value. We saw PayPal, we saw Fidelity, we saw Square is already in. The time is not far when these things will start to become commonplace. So stay engaged, keep on learning. That's the only way to survive in this world. Is things change fast. So keep reading, keep learning. My intent was to introduce you to these concepts. So then now you can go and do a deeper dive. You can go as deep as you want to. There are too many things happening in this world. You can get completely caught in the rabbit hole, or maybe watch it from sidelines. You choose how deep you want to go. I believe I have done my job of giving you a teaser into this world. Now I leave up to you if you want to see a full movie or not. All right, any questions on decentralized world, not just the finance, but the complete decentralized world. Before we jump on to our next section in analyzing Nanox. Asif says, go to any party. Yeah, I think if you, with this knowledge, you go to any party, either they think that you are a genius, that you're talking about ERC 720 and smart contracts, or think you are crazy. These are the only, there you will get completely polarized comments. People, those who understand and read about these things, they will think, okay, here's some person who knows the stuff. Or people who are completely unaware of this, they'll think you're mumbling something which just doesn't make sense. Dave says you need to do it in layman's term if you go to any party. Exactly. I have, at least in these sessions, I try to put it in as much layman term as I could. But at the end of the day, this is a hugely complicated technical work. So even though I try to put it in as much layman language and not use tech terms, some things will still creep in. All right, let's talk about our next session. Everyone ready about Nanox imaging? And then we will jump on to trades. Where did Nanox? Okay, let me bring up my Nanox thesis. As you, by now, you know that when I talk about any company, I just don't look at just the chart and say where the company is gonna go. We're gonna do a little deeper dive onto this company. Company that I want to talk about today is Nanox Imaging. So I spent some time on reviewing their F1. So if you want to review, come on, cannot open this. You want to review the F1, you could. This is an equivalent of S1 document. If a company is a foreign company, then they have to file F1 instead of S1. So I spent some time on reviewing this. I found it really interesting. I think I chatted about it in our Slack group also. In some of the previous sessions, I briefly hinted that this is a stock I'm watching. But I never spent time in talking to you about my thesis. So this is where we're going to spend time today, is talk about my thesis around Nanox. All right, so a quick updates. 25th of August, Nanox went IPO. I didn't know about Nanox then. It's only, I think, when they went IPO at 18, stock went up to, I think it jumped up huge. 40, 50, 60, all the way to 66. Okay. That's where people say, what is this? What's this Nanox? So then I did my initial study on 22nd. So let's talk about that. All right, what's the company mission? Our mission is to replace all legacy sources with our digital X-ray. We will dig deeper into what do they mean. World can be a better place if X-rays become more accessible to all population. Their whole idea is today, the way the X-rays are produced are super expensive, difficult to maintain, and that means the cost of doing an X-ray is beyond the reach of most of people in this world. So if we as a Nanox can find out a way to replace the current sources of how the X-rays are generated, the whole process of X-ray to diagnose the diseases could become much simpler, and then more and more people can avail the facility of X-ray because it is simpler, it is cheaper. If everyone have an ability to get an X-ray done, doctors will be able to diagnose many diseases much quicker. And that's their mission, is to make sure they can replace all the legacy sources with a digital X-ray and make it much cheaper. So we'll dig deeper into, what's the business scope, etc. So company was founded in 2012. It's an 8-year-old company by Ran Poliakine and Hitoshi Masuya. I'll talk about these founders, but it's almost an 8-year-old company. It's not just coming completely out of blue. It's been existing for some time, and they have been doing some work in the back end. You can review the company's presentation if you want to, but this is exactly what I have done, and I have kind of created a summary which I'm going to go through it, but this also gives you good insight into what they are planning to do. Okay, so for example, 2/3 of the world population has no access to medical imaging. And we are not talking about the developed world, it's talking about the whole world. Majority of the remaining 1/3, they have a wait time of weeks or months before they can get their X-ray done. It's too expensive and too complex for mass deployment. So anyway, let's continue our discussion on Nanox. What's wrong with current existing solutions? X-ray has been there for ages, but the method to produce X-ray has been the same for more than 120 years. The way X-ray get produced has not changed. It's the same method that we've been using for 120 years. The machines are bulky and expensive and is not affordable for poor countries. It's like Edison bulb versus LED bulb. Both give light, but LED is much better way than the Edison ones. Right? So today, on average, the cost of X-ray scanner review by radiologists is $300. Most of the world can't even afford it. It's too expensive. So the investment case for Nanox is simple. We talked about it, 2/3 of the world is not even being scanned. Why? Because the cost of producing X-ray is huge. So let me go to their website. They had a cool video of how the current X-rays is produced and what they are doing, which will give you much better insight to you on how it happens. So I will give my commentary as you watch this. Okay. Okay, so this is how the X-ray machine looks like today. So let's look at how the X-rays are produced right now. So this is a huge vacuum tube. In this vacuum tube, you have a filament which is heated to 2000 degrees Fahrenheit. It generates a lot of electrons, which hits this anode plate. Now it generates tons of heat. So they have to rotate this anode to disperse the heat. So otherwise it will burn down the whole system. This is essentially how X-rays are produced for 100 years. Now this is what Nanox has done. They have just changed the way X-rays are being produced. There is no heating filament. So they have a digital silicon chip where they have 100 million nanodes which are producing electron beam, and they hit this anode at a different spot. So then, because they're hitting on all different spots, there is no heating element. You don't have to have any rotations. Then you use this in a tube and you generate a complete new source of X-ray, and the size of the X-ray machine is reduced. The whole cooling system is no longer required. So that becomes much easier and make it much cheaper. These Nanox X-ray machines can be, I think I do have some data around, can be bought at way cheaper than what the traditional X-ray machines cost. So that's an interesting video wherein they actually showed how you can reduce the overall size. Right? So we talked about it. We saw the video. The ARC, that their machine comes in that the weight of their machine, the round thingy that we saw, that weighs only 70 kgs versus 2000 kgs for the average CT scanner. And the production cost is around $10,000 as compared to $1 to $3 million for a CT scanner. Huge game changer. This is some of those technologies that could completely revolutionize the whole industry of X-ray. We looked at it. The traditional systems work like this. Nanox, this whole round stuff, is what produces their X-ray. So question from Dave: how were the level of radiation levels on human, less or same as traditional? We'll see that. So they have done a comparison of the X-rays produced and the X-ray film on how it appears. So Dave will get to that. Not only they have this X-ray machine, what they've also done is built a suite of cloud-based services based around charging for scans, right? Which is their Nanox cloud. So means once your scan is done, it's uploaded to Nanox cloud, where they already have contracts with the radiologist who will review the scans and then give the analysis. So they have machines, they have Nanox cloud. The hardware is made in partnership with manufacturers like Foxconn. We will talk about in detail about the other partners also, while the services are sold to doctors and other clinicians and researchers. Now, using the combination of new tech, which is their ARC machine, and the AI, before the radiologists look into it, they run these all scans through an AI. Nanox plan to reduce the cost of X-ray process from $300 to $40. That's mind-blowing. That they could potentially reduce it to $40, and this is how the money will be distributed: $14 to Nanox, $16 to radiologist. Now again, the idea is great technology. What's the total addressable market? The total addressable market, not including the support, maintenance, insurance, and ancillary services, could reach around $21 billion by next year. So we don't want to look into the companies in which the technology is great, but the market is not there. So when you go to any VC, first thing they look at is what's the team, and the second thing they look at is what's the market that you're trying to address. They don't even want to talk about your product. Before they talk about what your product is, they want to look at how big the market is that you're trying to address. Where are you trying to penetrate? If the market is not big enough, your product could be great. Sorry, not interested, not giving you money. So this one is a huge market, the overall market of X-rays. Now let's look at companies' moat. Great, market is good, but what could prevent others from copying you? So the moat that company has is a technological moat right now. They use a novel technology of chips. We saw that in a video, that instead of heating the filament to 2000 degrees, they use chips. Now, due to usage of chips, the heat generated is not huge. So there is no need, the big cooling systems are not required. So you can miniaturize the whole machine. That's the use of technology for this particular segment is what's new. The tech itself is not new. So Nanox was founded in 2012. The work on the tech had been happening years before that. This technology was developed and perfected in Sony while they were working on a 3-dimensional TV. Do you remember about 3D TV? I still recall, maybe a decade or earlier, the 3D TV was rage. In some futuristic magazines, you could see that there will be a 3D TVs, and then slowly those disappeared. Sony actually was working on these 3D TVs, and the team of Sony was working on a way to produce X-rays without generating so much heat. So the tech was actually developed in Sony. But anyway, Sony shelved that project. So some engineers from Sony left and they formed Nanox. They said, now we know we can generate X-ray way cheaper with the smaller instruments. Can we find another use of that X-ray? How do we perfect that for medical application? So they created a company, Nanox, to find application of the technology in medical field. And they acquired the know-how from Sony. They bought the rights of those technology from Sony. Sony was, I'm not doing anything in 3D TVs, that's fine. So now they have patents granted in US, Israel, and Japan, and pending in the rest of the world. So Nanox company now owns the patent behind the whole process. That process is called cold cathode X-ray generation. Process is not new. It's not that they have created a new technology. They have perfected it for use in medical field. The tech was created by great engineers in Sony. Let me address some questions. Foxconn, the Taiwanese company that manufactures TV. Yes, the same Foxconn. And then they have a partnership with others as well. Technology going to advance, but I'm sure the cost won't come down. Insurance company gonna ripping us off. And again, I don't know about US, but I think their main focus is on the rest of the world where people can't even afford X-ray. In US, everything around the whole medical side is completely, I want to use the word, but let's say completely tangled one. You don't understand how everything works out. So, which is different than maybe from the rest of the world. There says, you remember seeing 3D TV in Best Buy? We don't see them anymore. Yes, so I do recall, a lot of discussions around 3D TV, but this tech was developed for the TV. Now it is being repurposed for medical field. Okay. So I'm excited about this tech. Let's look at few more things. How they will make money? They're massage or medical service as a service. What they plan to do is give machines for free. So this will, my opinion, this will reduce the entry barrier, right? If I'm a hospital, again, I'm not talking about US-based hospitals. They have tons of money. But hospitals rest of the world, why would I want to buy a $10,000 machine? It's a new, and the incumbents will always be there to offer them discounts and dissuade the hospitals from trying out something new. So what they're planning to do, Nanox, take the machine for free. We'll basically charge you for the screening, right? Software as a service, that model works great. No initial capital investment, so no CapEx, everything become OpEx. Your CFO is also happy. We'll charge customer on per scan basis instead of charging upfront for the machine. So they have these arrangements with minimums built into the contracts. And if you go into their website, you will actually see some of the contracts that they have already forced with many of the companies. Just go there. Let's go to their news section. So they have an agreement with, let's say, for SPI Medical in Mexico to deploy 630 Nanox. They have agreement with Coal and Wine International for deployment of 500 Nanox systems in Taiwan and Singapore. They have agreement, $48 million agreement in Russian Belarus for Nanox ARC. They have agreement with ProMedica Bioelectronics for deployment of 500 Nanox. So they have signed up agreements for them to deploy with some conditions that these need to be approved by regulators, right? So we'll talk about it. But they have a minimums built into these agreements. So their in-house calculation is with the minimums in place, even if you don't use the machine, you still pay those minimum charges. They'll still be able to earn $25,000 per annum per machine, just with the minimums. That's one way they plan to make money. Dave says, I see both a trader as an investor. So Dave, I am actually an investor. Now to invest into this, I will use option trades. So I don't pick up any ticker for trading out of blue. I want to know why even I want to spend a time on that ticker and what's my stance on it. So I go through this process of, if any new comes up, of analyzing. Now I am bullish on this. Now I will use option trades to start putting my bullish one. So you got it right. So that term does not exist, but I want to call myself as an option investor. I don't do in options because I want to get in and out of companies very soon. I have a long-term thesis for a company, and then I use option trades to acquire it cheaper, or to sell it at a higher, or to reduce the cost basis. That's what I am. Liz question, Liz, there are images that they have shown. Let me see if there's on the website, or maybe do I have that in the document? No, I don't have a image in the document. So they have shown the comparison of images. Let's bring that up. I have to find that out. But they did show the comparison of the traditional X-ray, X-ray generated using the traditional methods. Oh, there it is. So a commercial X-ray system and X-ray generated through Nanox. So this is hand. This is the feet, a foot. So, and this is foot and ankle. So they do have all these X-rays. Now this is left shoulder, etc. So you can look at more research. Now, are they any better? I think I can't talk about it. Only a radiologist can talk about it. But we will definitely look into what are they going to do in next, I think it's next month. They're going to present it to a lot of radiologists. All right, coming back to how they plan to make money, medical as a service, or they can get a license fee. I actually listened to the whole, there was a big, 1 hour conversation with the founder and the CEO of this company. And he was like, our focus is to make sure everyone in this world has access to X-ray. We can't build it. We will open source our technology for others to build the system so that, these systems can be built at scale, at a speed, and we can make this world a much better space. So this is where they comes in, that we will open source or we will license our technology to Fuji, GE, we'll give them for free, play it. And if you want to use it, then you pay us a license fee. That's another source of revenue. And lastly is sale of machines, where you cannot do as a service because of, there are some countries where they found that there are legal hurdles around medical as a service. So in those cases, we will sell the machine outright, whatever that $10,000. So there are different ways in which they plan to make money. All right, margins, we talked about margins already. Cost is 10K, and you add additional cost of installing, training. Revenue is $14 per scan, and the end margins is around 60%. You have to account for HIPAA, GDPR, cloud storage, and then it's a 60% margin, which is a good enough margin for me when I'm looking at a companies to create my own thesis. Are they top in this domain, and who are the top 3 competitors? They don't have any competitors. Incumbents are the competitors. When I say incumbents, means they're the ones which have the legacy X-ray machines. There is no one else who is actually doing with the cold X-ray generation. Let's look at their partnerships. So they have a manufacturing partnerships with SK, South Korea Telecom, which is the second biggest company in South Korea, right? So they have built a partnership with some of the big names. The Hynix, the division of South Korea, SK Telecom, is the second biggest semiconductor manufacturer in the world. And that will be, Hynix will be the one which will be manufacturing the chips that we saw, which generates that whole electron beam. Okay. The CEO or the chairman of Hynix is also on the board of directors of Nanox. Again, Nanox is perfecting. For 8 years, they worked out to find out and confirm that we can use this technology to generate X-rays that can be used for medical benefits, not for creating 3D TV. Now, of course, they don't have any manufacturing prowess. They're not a manufacturing company. Nanox is a tech company. So they now build up the partnerships with the manufacturers. Chips will be manufactured by Hynix, which is the second largest manufacturer in the world. Foxconn will manufacture units. And then they have SK Telecom, they have a Fujifilm, which will be creating the mammography equipment. Then they have a partnership for their AI stuff. Remember, all the scans get onto the cloud. AI will basically take a first pass on that cloud to try to find out what's wrong, what can we infer from that X-ray. So there are partnerships with companies that work in this field for cancer detection, for head and chest X-ray, for mammography X-ray, Curemetrics, for stroke, Brainomix, And then they have a partnership with, deployment partnerships. Some of them we already talked about. Let me see. Okay, interesting. They're not using TSM. Yeah, I didn't see them using TSM. Quick look. I know this will be an eye chart. So the CEO is Ran, and the other co-founder is Hitoshi. So Hitoshi was the person who was originally co-invested in the Nanox with Sony. So now he is leading the whole Japanese operation of Nanox and is also a member of board of Nanox. Other one I want to talk about is Ran. We probably have not heard of this person before, but if we have been to Starbucks 6 months ago, not now, we have used its products. Any guesses? Is Hitoshi the founder of Bitcoin? I guess then he doesn't have to do. So that pseudonym was Satoshi. And his Hitoshi, maybe brother, lost brother of Satoshi is Hitoshi. All right, so coming back to the discussion, in Starbucks, we have seen the products invented by Ron, and this person has been a serial entrepreneur and has been working on bringing a lot of technology, commercializing a lot of technology, which makes our life easier. He was earlier the CEO and a founder of a company called Power Mat. And those are the mats which, if you go to Starbucks or those cafes, just keep your mobile phone on that round circular mat and it charges powerlessly. That's what Ron had done earlier in his previous role as a CEO of PowerMat. He's an ex-founder and CEO of PowerMat. So he's not, someone coming just out of blue. He is been in this tech space for quite some time. And I also looked at some of his other projects. Now, under the Nanox is one project, but he also has made his own personal investments into a lot of other projects. Most of them are, again, on some revolutionary technology, which, if proved right, have a game-changing capabilities. Like I said, founded by Japanese core team that worked for decades in this technology. So someone thinking about how an 8-year-old company can do something which, let's say, GE has not done it, something that a big Siemens has not done it. Those are multi-billion-dollar companies. How a small company can do it? My answer is, Nanox has not been working on this technology. It was Sony and the team at Sony that worked for decades on this technology. Nanox had just used it for and perfected it for medical usage. Okay, so what's there right now? Current one, they have a prototype is available. The machine is not yet commercially being built. So the prototype is there. It is being used in a hospital in Israel. SK and Foxconn had asked for 6 weeks of lead time. They need lead time if they were to start manufacturing it. And I believe that 6 weeks could become 2 months or 3 months. I don't care much. But once the regulatory approvals are done, that's where the manufacturing will start. Again, this is a pre-revenue company. They have nothing that they can sell today. The only thing they have is a prototype of a machine and the great tech. So if this sounds familiar with what we have seen a couple of months ago, pre-revenue Nikola, no product as such. Only thing they had was a technology and a prototype. And if you think that, hey, this could end up same as Nikola, I won't blame you. It could. I don't know. But I find this technology to be very promising. And if regulators don't approve it, then this company is not. Right? So that's a huge risk. So we will talk about that. Yeah, Nicola. So question, so Nanox licensed the technology from Sony? Yes, they bought this technology from Sony, and now Nanox own the patent on this technology in US, Japan, and Israel. And they have a patent pending in the other countries, whatever the big countries they've applied to. But now they are the owner of this technology. So where they stand on our regulatory authorities, this is the most important. The whole investment thesis could go bust if this doesn't work out. They submitted 501k application. 501k application is an application which is not for anything new. Okay, so they got a deficiency report from FDA, and they have responded to FDA, but now the FDA they have responded to FDA. Now FDA will be reviewing it, and of course they have a lot of other priorities. All the resources are FDA are now directed towards reviewing anything which is related to COVID and push back anything which is non-COVID. So they are still waiting for FDA to come back. They're expecting that they may hear from FDA in first half of 2021. Europe, it's a bit slow. They're expecting that the approvals may come along in Q3 2021. And then they have also applied for approval from Mexico, Brazil, New Zealand, Australian regulatory bodies. So this is where they are in terms of the regulatory authorities' approvals. This is the most, I cannot emphasize enough the importance of these regulatory authorities. And they have to wait until they get an approval to start manufacturing. Otherwise, this company is done with. How much they want to do? They want to do a first wave of deployment, 15,000 units by 2024. Today, they have a contractual agreements. Remember, we talked about agreement with hospital A, B, C, D. They have a contractual agreement in place for 5,000 units. Means if the regulatory approvals are through, this deal is done deal. Those are legally committed deals for 5,000 units. Non-committed deals is with SK, they will apply 2,500 units. And USA RAD, which is USA Radiology, something like that, we can find it out, which is a distributor of X-ray machines in US. They have not committed, but agreed that if the approvals are done, they will buy 3,000 units. Again, I want to make it clear, this is not committed. 5,000 is already committed. Okay, financials. In my general review of a company, I look into financials, not as a CFA. I'm not a CFA or a CPA. I'm a tech guy, but I look into financials just to see, the health of balance sheet or cash flow or some of the things at a high level. We don't have to do it. It's a pre-revenue company. So very clearly, they don't make any money. What's the business risk? Business risk is a regulatory approval. Number two, I would say is manufacturing, ramping up the manufacturing. Even though the Foxconn and SK have told they'll need 6 weeks of lead time. I don't know after COVID, how much of capacity will they still have? Units, at what level those units may be operating, what level of operating efficiencies those plants may be. So that could be risk. Third one, like Nicola, short sellers have called that this company is a fraud. It's a scam. So let's, and I have, I also looked into the short seller report, by the way. Why to ignore it? Right, so let's bring that up. From a Citron research, very well respected. How do we get rid of this pop-up? Hold on. Okay. For those, I have respect for short sellers because they take a lot of risk when they're going short on any stock. So we just can't ignore it. And like they've said, Nicola. Yes, Nicola had a short seller report from Muddy Waters or Citron. These are the two. No, Nicola had from Hindenburg Research. There are three. These three are, at least two of them are very well known, Muddy Waters and Citron. And Hindenburg Research came into prominence because of their short seller thesis on Nicola. From an outset, this looks like to be a Nicola's cousin. Only technology, only prototype, agreements in place, zero financials, no revenue, and a short seller report. So I looked through the short seller report also. I have full respect for Citron, but again, they are not gods. Everyone make their own mistakes. Citron years earlier told that Shopify was a scam. Shopify numbers were all first. And at that point of a time, I had only put a small investment into Shopify thinking, oh, this will go down. Okay, and then the rest is a story. That's not to say that, you know, I will discard Citron because it kept me from investing in Shopify at $180. And I had kept aside some money, but I saw Citron's short seller report. I'm like, I'm only putting 10, you know, only 1/4 or maybe 10% of what I kept. Let it fall down and then I'll buy it. And then I never bought it. Anyway, the whole idea is even short sellers can go wrong. There was a short seller report on Wayfair that the stock is worthless. We all know where Wayfair is. So do your own research. So I spent time on researching on, reviewing Citron research report. And I think many of those, the claims that Citron has done probably don't have much backing. So I'm not changing my thesis on it. And I think if I'm not wrong, Nanox doesn't have only Citron. Probably Muddy Waters has also come up with a short seller report on it. But again, Muddy Waters also said that Jumia is a scam. Now they've turned it around. And now they are putting a thesis that Jumia is a buy. So again, no one is God here. Short sellers do their own homework. They have their own thesis. Maybe they already made money. When Citron told that Nanox is a fraud, maybe that was a time when Nanox fell from 66 all the way to 23. Citron made its money already. Oops. Hold on, let me go and see what's happening to my car outside. My apologies for this interruption. I'll be back in a few minutes. Okay, my car looks okay. Oh, where was I? Not. Okay, yeah, so I've looked at the research report and looked at the arguments that Citron has put forth. And what I have found in my own research and listening to the CEO presentation and what they presented in some of the conferences, I am still bullish on this one. But with the knowledge that it could go down to zero. Okay. Investors we talked about, they have SK Telecom, Fujifilm, Foxconn. They've got some big investors. Now, again, when I look at a company, we also want to look at what are the other optionality they have. not for just the medical one. Once, if FDA approves their way of generating X-ray, that X-ray have lot of other use cases. Right? For example, they can use it for breast cancer. X-rays depend on the density of the object being scanned. So instead of doing the scan for your skeletal for figuring out fracture, they could use it for detecting cancer. They could use X-ray for real-time video imaging, for airport security, for industrial usage, doing a non-destructive testing. So the optionality comes from the fact that X-ray, wherever the X-ray are being used, this company has a role to play. Remember, they are not changing, they're not claiming that using X-ray you can detect fracture, or using X-ray you can detect cancer, or using X-ray you can find out a crack in your machinery. They're not claiming any of those. Those claims are already done and approved. Those use cases exist. Only thing that they're doing, and that is why the filing that they're done with FDA is different from what pharma company do. All they are telling FDA is, we are generating an X-ray differently. Once the X-ray is generated, the rest of the process of how the X-ray is being used, what's the efficacy of using X-rays, all those are already approved. So that is why they had to do a different filing. They're not claiming that the X-ray is doing all these things. Those are already claims done and approved. All they are saying is, we are generating X-ray in a different process. Once, if the process of creating X-ray is approved, now they have a play in all the areas where the X-ray is being used today, right? So they have tons and tons of optionality. Right? All right. Talking about some of the questions, why Sony parted with it, and why not big companies is not in this one. So some of the companies have succeeded in some initiatives. Many companies are working on using carbon nanotubes in cold methods. So it's not that other companies were not working on it. There are some companies who were working on it. The cold methods means you don't have to generate so much amount of heat, because that heat is the culprit that you have to have that big system. So Sony was working on field emission technology for display, and they were able to generate the X-ray to hit the TV. And then the rest is the story. Sony shelved the project, engineers came out, created Nanox, and then say, now we know how to generate X-ray without producing heat. Let's see if we can use it for other purposes. And so they spent 8 years in perfecting it for medical space. So other question people ask is why they've gone IPO so early. Right, so the response, and this is, I just summarize the response from the CEO is, right now, they were able to generate a lot more interest in the market because of COVID-19. There was a lot of interest in the market, and they were able to raise capital. And the dealing with the customers worldwide become much easier if you are a publicly listed company. Otherwise, it's some company from Israel. Right? Now, if they say that they are listed in US exchanges, it gives them a lot more legitimacy. And this is a little more on a philanthropic side. It's like we want to make sure that the shareholders can enjoy the growth of a company. Right? If you get into a company when the company is just starting, just kicking the tires, and then you have a time and ability to ride through the whole growth of the company. Unlike many of the companies that are still staying private, like Robinhoods and Airbnbs of the world, that by the time they come out, we as a shareholder, we just don't have a chance to get into at those early prices, right? So a couple of questions. So they had a product, they have a prototype, they have agreements in place. So they decided, let's go public. That's the reason why they went public. There are more details around here. Net summary, I'm very excited about it. It has the potential to change the world in order what they can do in the X-ray field. But if it doesn't get regulatory approvals, it'll become junk. So be cautious on this one. It's a 1 or 0 status company for me. It could become huge or it go to junk if the approvals don't come through. Now the recent announcement why it picked up, the stock picked up again was they are actually giving a demo of their machine on somewhere in, I think, next month. They are doing live demonstration of ARC system at Radiology Society of North America 2020. There's some conference coming up, RSNA 2020 conference. Of course, it will be virtual, but they will be giving a demo of their system. And if this demo is successful, at least it will shut up Citron and other short sellers who say they don't have any products and they don't have any machine which is actually working. So we'll see how the prototype looks like, how the prototype works when they're gonna do this demo. Rather than believing those YouTube videos where they have shown the machine working in a hospital in Israel, let's see this machine working in this conference. So is the radiation dose the same? I think so. Otherwise, you won't even get those approvals. Though that will be the first thing that FDA will look at is the amount of X-ray and the radiation levels coming out of that is same as for what's being coming out from the existing X-ray machines. But I have not found the numbers. I don't know what technical terms they measure it. I might try to find it on those numbers. So that's my investment thesis and risk analysis on this company called Nanox. I am in it with the full knowledge that all my investment can go to zero. So invest wisely, think about the risk on it before you invest. All right, that's completes our deep dive into Nanox. Any other question? So Dave says, what's your trade here? I have a short put, Dave, and some long stock. So that's no, I think my short put is November 20th. Again, I'll wait once this one, November 20th expire, we'll see what happens on RSNA, and I will continue to play on this one. Again, my thesis is this, right, which I've repeated many times. If it's a good company, then doesn't matter whether I get in at 30 or whether I get in at 60, right? If we're gonna become a great company, then the $30 difference won't matter. So right now I have a short put. If it goes higher, that's fine. I'll do another short put and continue to play with it. Cool. All right, I think some of the, I saw some question not here, but earlier was that Nanox had not spent much money into R&D. So how come they built such a great product? Again, they have not built this product, but by comparison, Livongo had spent only $12 million in 2017. And then Nanox has spent maybe $8 or $10 million. And some of the short sellers are saying It's a scam because they haven't even spent money, and they are saying they built this technology by spending what, $8 million. So guys, Livongo is not a fraud. Today, Livongo is $13 billion or whatever, $15 billion company. And they spent 12 million when they started. Any scrappy startup is always conscious of how they spend the money. And I think Nanox didn't have to, because Nanox didn't even invent any technology. So that's why I'm okay. When I looked at the short seller report, I'm like, I'm okay that they spent only 12 million. I discard that as an argument for going short on this one. So anyway, do your own analysis. This is what I built up. That's my thesis, and that makes me bullish on it. You go through the social report, think what you know about it, and make your own judgment call. All right, that brings us to the last section. Let's talk about some trades. Interesting. Nanox sounds interesting. Profitable or not, I don't know, but surely it is interesting for me. All right, let's pull out some trades. Okay. Now let's talk about the trades that I closed this week. These are the trades that we have been talking about for quite some time. And okay, this is, the election is this week. After, have you closed most of your positions to avoid the volatility? No, I still have November positions, but none of them are the ones which could challenge me a lot. Most of them are defined risk positions, and then I've reduced my delta a lot. So my directional risk, I've already reduced a lot. So I'm not worried about what might happen in election. So I've been fortifying some of my positions. If they were naked, I'll make it as a defined risk. So I know exactly how much risk do I have incurred on those trades. And then at a portfolio level, I have just reduced a lot of delta. So that means I don't have to pull out or sell my, let's say, if I have the long stock, I don't want to sell it. So, but I use options to reduce the deltas on those, so that even if the stock goes down, it's fine. I won't be hurt that much. Oh, there are multiple strategies for reducing delta. If you don't want to sell a stock, you can sell a call spread. You can buy a put, or you can do any combinations of these. Or you can just go short on indices. Okay. Let's look at the trades. The trades Roku, we had a iron condor on Roku. Talked about it last week, and I told I might look at an opportunity to close it. So we closed it on 22nd. When we opened the trade, stock was at 194.75 cents. It was an iron condor with a strike prices of 180 was a short put. Sorry, not an iron condor, but it was a naked put and a call spread. And then I'm like, okay, this is making profits. It's a naked put. Either I convert it to a defined risk or I close it. And it was making, decent amount of profit for us. So we closed it on 22nd. Stock had cooperated. Stock went up from 194.75, closing at 222 in the trade for 21 days. Good profit, good return on holding, return on investment for 21 days, almost 30%. Other trade that we closed on was a JPM. The JPM has been one of the best tickers for me. By now you might be bored of me saying that in every meeting. Well, what to do? It just works. It's been working every single expiration. So I closed the open JPM trade that we had. Again, we sold, in this case, we had sold 2 short puts at a strike price of 95 in one call spread at 115 and 120. That was a trade. Overall premium gathered was $9, approximately $9. Opened it on 2nd of October. Within 17 days, closed it. Stock price hasn't done much. Stock was 98, now 200, but all the theta decays and all that, we closed it in 17 days with a profit of almost $540, 20% return. Next one is CGC that we talked about. I had a $15 short put, closed it. Again, in this case, even CGC went higher. So we got some help from the stock as well. And that's the reason it took us only 12 days by the time it hit our profit target. So we closed this trade as well. And the other one, which we had on CGC. So we've been tracking 2 trades on CGC, which is Canopy Growth, cannabis industry. All those, both the trades were held by comments from Joe Biden and Kamala Harris saying that they would decriminalize the usage of marijuana. That doesn't mean it has become legal. It just means that it may not be a criminal offense, which is completely 2 different things. But market went up and I'm like, okay, I'm taking this opportunity to close the trades on profit while it is giving us a decent return on investment. So these are the trades that we've been talking through over the last few weeks. And I was a little more aggressive this week to close the trades. I had closed a lot more trades in the past week at a lower than a usual profit target because, as Des said, how are you, protecting your portfolio from election volatility? Close it a little earlier. I don't want to wait, to squeeze the last penny from the trade. If my profit target is 50 or 60%, and if it is making 45%, I close many of those trades as well. So net, I think this week I closed 31 trades, 27 were profitable. So I was a little more active in closing trades. Even if it has a lower profit target. So of all the trades that we have been tracking, it's a decent profit that we made on at least those 4 or 5 trades. Let's look at the new ones and the ones that we've been talking about in the previous sessions are still open. Let's look at PagerDuty. PagerDuty, let's bring that up. Okay, let's start from the top. Silver, no change in silver for last few weeks. We still have a inverted strangle on silver with $20 call and $22 short put. So these 2 are inverted strangle. Overall premium is $4.21, which is more than the width of this inversion. So if stock comes between this, we'll still exit it for a profit. And then I also have a $24 short put. We opened it on 16th when we rolled out from October to November. And I'm still holding these positions along with the 300 long stocks that we have. So no change in silver in the past week. I'm still holding on to my silver position. Other thing is XLU. XLU is, we have this old iron butterfly centered at 63. It is now XLU is at 64.75. If it goes to 65 or above, I will probably ladder on to this trade. And that was a thesis all along, right? When we initially put in the trade, that's exactly what I said, that I'm selling an RN fly to play this ticker. This is our first trade and leaving room to ladder on more trades if needed. But till now, the stock hasn't moved much. Right? When we opened it, the stock was at $63.32. Right now, the stock is at $64.75. And if it goes to 65, I will probably ladder on and do another iron fly to make what that would do is to put the break even, and it will center a break even a little more. So we'll see how it happens next week. Number two, it gives us a bearish tilt to the portfolio. If market falls down or utilities fall down, this will become more profitable. So that's another reason that at a portfolio level, this is a good trade. Even if on an individual trade level, if it goes high, it lose money, but I still want to keep it because at a portfolio level, it is serving its purpose. Okay, so that's another trade. XLU, we are still holding. EB, Eventbrite, opened it on 9/29, and I'm still holding it. Eventbrite actually saw some good moves, I think, on Friday. I didn't know what the news was, but anyway, we have a lot of buffer in this. So, and we also have a lot of time available on it. Position is not big. If I have to take a delivery at $10, there are only 3 contracts, so not a huge amount, which is, that's why I'm not closing this for now for, as a part of my election portfolio. I'll still hold it. It's not a big position for the portfolio. Which other one? So Lulu, I'll still hold it. Again, this is a defined risk, even though it is very close to our short put. Even if the stock falls down, we know exactly how much we're gonna lose. There won't be a big expansion in the buying power. So I'm okay to hold it and go through the whole election volatility because this is a defined risk trade. So these are the trades that we had talked about and carried along from a previous session. New one I want to talk about is Square. So Square actually fell down. And if you recall or go back to last week session, I had mentioned that I have my eye on Square, but it is too high for now. I will wait for Square to cool down before I do any trade. And that's exactly I did on Friday, was to put an iron condor on Square. Yeah, it was on Friday, 10/23. Again, going defined risk. So unbalanced iron condor means $25 width on the put side and $2.50 width on the call side. The reason is Square will be announcing earnings. I think it is next week. And my thesis is that it might go higher. So I don't want to lose money if it blows through, goes, 200 or 210. If that happens, we'll still exit this trade at a profit. If not, if it falls down, it's a defined risk trade. I'm not gonna lose too much. And then I might pick up some more Square at a lower price. So that was a thesis. We'll see how this behaves after earning. In any case, we got almost $630, $631 of a premium for blocking $2,500. So our capital invested is $2,500. Max we can make is $630. I would exit it when we are making close to $350. So $350 on $2,500 is for less than a month. I think will be a decent return on investment. So that's why we did this trade. That's it. That's all the trades that I wanted to share. And that brings us to the end of today's session. We'll open it up for Q&A. Anyone have any questions? We can talk about it. Ramesh says, let me see. In my case, few that are borderline gain like 15-20% gain. IBM short put a loss. Okay. Lost in ACB Aurora. So from a marijuana or cannabis, not say marijuana, the right term is cannabis. So from cannabis industry perspective, Ramesh, I am bullish only on canopy growth. Again, thesis is still the same. What we talked about a few sessions earlier is this will need a lot more investment. So when I'm looking at marijuana, full life cycle company means marijuana grower, marijuana marketing, etc. Everything. ACB is there, Afria is there, Canopy Growth is there, Tilray is there. But looking at the financial profile of each of these companies, I am more interested in Canopy Growth because they got a big balance sheet coming from Constellation Brands. That's why I am playing Canopy Growth and not ACB. STZ. What's that STZ? Oh, Constellation Brands. Yeah, I never invested in STZ directly from a beer or wine alcoholic industry perspective, but all I like is that they have investment in CGC, and that's my association. I didn't realize STZ is their ticker. Medical DCPH. DCPH. So let's bring up. I don't think DCPH was on our list of medical marijuana companies. Hold on, let me bring up that document once again. Oh, cannabis industry, marijuana industry analysis. That was a document, right? So we look through the whole document. There's a list of companies that we looked at. All right, yeah, so we looked at these ones, and the greens are the ones where I said, let's do a deeper analysis. The other ones, I didn't do it. Again, so CGC, we talked about. Green Thumb, I talked about Charlotte's Web. GW Pharmaceuticals. Again, if I'm, like I said, if I'm doing in cannabis or CBD product manufacturer, retailer, full life cycle, the whole value chain we looked at in the document above. I mean, in this document when we reviewed this, that time I told these are the only two companies I'm interested in. And then out of that, I'm putting in CGC. We did not look at DCPH. DCPH wasn't even on my list. What are they? What do they do? I didn't figure out, is it a DCPH Pharmaceuticals? Let me go and, is it too small? Hold on, let me just DCPH. it looks to be any other pharma industry. Or so what is to do with the cannabis? I mean, are they now doing something around the cannabis? It's a pharma company, but I don't think I ever looked at it from a cannabis perspective. Is Coke also getting into this? Coke is, what was the recent news from Coke? Coke is getting into alcoholic beverage because of has happened to Boston beers, right? If you look at the Boston beers, and I have never tried, but their hard seltzer, that has become a rage. And not just Coke, but I think after Boston Beers had introduced their new product seltzer and hard seltzer, a lot of other alcoholic beverages company have been introducing hard seltzer. I've never tried it, but I remember when I went to Safeway, I saw cans of hard seltzer from all other brands, not from Sam Adams, not from the Boston Beer, but I think every company is now jumping into creating hard seltzer, and that's what I think Coke wanted to do. Coke hard seltzer. I think that's what Coke had announced. Yeah, that's exactly what Coke had announced. Is they also want to create, produce their first hard seltzer. So, but I don't think Coke has given any announcement. Was it Coke who did it in Japan? There was some company, maybe Coke or Pepsi, who had mentioned that they would do a cannabis-infused beverage, but that was in Japan, not in US. So I don't consider, yeah, they did it in Japan, but that's an old news. Not in US. Yeah, but if I'm bullish on cannabis, I'm not gonna go buy Coca-Cola shares. I may buy it for some other reasons, because Coke is right now down. They also give some nice dividends, and it might be a stable company, and it might recover. They will be the beneficiary of economy reopening. So if you have that perspective, you may go long on Coke. I'm not going long on Coke for cannabis. All right. We talked too much today. A Forbes article. Oh yeah, but like I said, they had announced it in Japan. They had announced it, but I don't know if they have done anything on the cannabis yet. This was the old news of 2018. I mean, 2018, when Tilray and all those were coming up, a lot of companies told that the traditional soda companies said we will also get into cannabis industry, which eventually they may, right? But I didn't see anything coming from Coke in recent times, except what they had done in Japan. But this will be a big industry. I mean, that's exactly what the CBD 2.0 was, right? Which every retailer or every manufacturer is doing is cannabis infused beverages, vaping concentrates, edibles. Internet 2.0, now we have a CBD 2.0. So that's where the majority of the money will eventually come from, because growing and selling cannabis leaves will be a commodity. It's a novelty right now, but a few years later, once these regulatory approvals are all done, everyone can jump into that, will become a commodity. So the money will be in the derivatives of CBD. All right, let's let's stop right here. Oh, it took a lot of time. It's almost 3 hours and I'm getting tired. Thank you everyone for staying along, and we'll talk again next week. Cool. Meanwhile, if you have questions, etc., maybe let's chat it on Slack. Let's stop recording.